My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, you've heard a lot about affordable housing, workforce housing, building from the ground up. Well, today's special guest, zooming in from Atlanta, Georgia, Majesty Gayle, does exactly that. Not only is he a developer, he is also a fund manager, and he takes the whole thing from soup to nuts, from the beginning to the end with his project. So Majesty, welcome to the show. Great to have you.
Glad to be here. Thank you for having me.
My goodness, your parents gave you a wonderful name. And a big one to live up to.
Yes, sir, indeed.
Yeah. No wonder you're up to big things. So Majesty, give us a little snapshot of what you do and what this means to you when it comes to workforce housing and development.
Okay, so as you mentioned, I'm based out of Atlanta. A real estate investor and developer. My specific niche is affordable / workforce housing, which means, I deal with a very sensitive demographic, also the most or one of the most affected demographics by the current housing crisis. And it requires a lot of stringing together of different resources, partners, everything from public organizations like the city, state, federal level, nonprofits, and private companies as well. So that's what I do. I put these deals together and I make them beneficial for not only the investors, but also for the residents, with the goal of beautifying and uplifting communities and providing returns to my investors at the same time.
Do you do this primarily in Atlanta or in the outskirts or all over the place?
Right now, most of our activity is in Atlanta. We are also in Augusta, which is not too far away, where we're currently looking at Florida, Alabama, and Tennessee as well to expand into those areas.
Okay, so it sounds really interesting what you're up to, but I'm having a hard time envisioning exactly what that kind of looks like. So do you mind walking me through one of your favorite projects that you did kind of A to Z and just kind of tell us the story of how that went and what it looks like?
Of course. So my recent acquisition from last year, it was a 28-unit property, completely vacant, 2 buildings of 14 units each, 2 bedroom, 1 bath, same floor plan. Property completely vacant, in a war zone, meaning, the area is pretty dilapidated. And these are the areas that we target.
So was this in Atlanta?
This is in Atlanta. Yes, sir. Okay. City of Atlanta. So acquired the property while it was vacant, other than the vagrants that, didn't have leases, of course. And got them relocated to where somewhere they can get help, rehab the property completely, gut, everything like that. And then stabilized by partnering with Atlanta Housing, Grady Memorial Hospital, which is the largest hospital system here, and some other nonprofit organizations that do rapid rehousing for people that are having housing issues. So that's kind of a quick rundown. The property is now 100% stabilized and, flourishing in the community. And there's now more developments happening around that property, it being somewhat of a catalyst for beautifying the community. And the returns on it have been, pretty handsome as well. So that's a walkthrough of kind of, a deal that we've done. And I do have my general contractor's license as well. So we self-perform.
Very, very cool. So what was the time frame from beginning to end of that whole process for you?
It was a blitz of a process. So we acquired it in August of 2024. We had to move very quickly. We had a lot of support from organizations like Lowe's and what have you. So we were able to get it done. But the rehab took about 2 months. And then the stabilization of it took about another 2 months. And we had it completely stabilized by February of this year. So it was a quick turnaround. It was vacant, so that helped out a lot, obviously. Yeah. But yeah, that's a quick rundown of a project that we do.
Very cool. So the end tenant profile for this property sounds like a lot of folks in need. Is this Section 8 housing, or what does this look like?
It's a variation of different types of housing programs. Some are Section 8, which, tenant based, they have a voucher and it goes to whatever property that they want to go to that will accept it. And some of them have vouchers that come directly from organizations like the Grady Memorial Hospital. They have their own voucher program with the state. And also Atlanta Housing, evidently, they have their own housing voucher program as well. So most of these tenants are covered through the voucher, whether it's 100% or a large portion of their rent is covered by the voucher.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Very cool. Is it okay if I play devil's advocate with you a little bit here, Majesty?
Please.
I'm sure it's happened more than once. All right. So I'm just thinking like a potential investor looking at this going, okay, so here's this good looking guy, Majesty, who wants to do this interesting project, but it's a disaster of a property in a war zone. And at the end, he wants to rent it out to a bunch of people that are on social assistance of one kind or another. How do you, or who are the investors that you get involved in these kind of projects? And what is it that gets them on board with this besides just altruism and kind of crossing their fingers and hoping for the best?
Yeah, and great question. I get that question a lot. But ultimately, well, one is the misconception around the demographic that we're serving and the problems that come with that. There's a lot of preconceived notions when it comes to that.
Yeah.
They're people, they're humans, at the end of the day. And yes, they need some help, but who doesn't? So, but how you wrap their head around it, one, they are impact investors. Most of the investors we're dealing with have an interest in earning a return, but also making some form of an impact. So that helps. But in terms of just numbers, our returns are typically better than most market rate deals you're going to see. And because the reason for that is that, one, we're getting grants injected into our project. That's going directly to the bottom line, which goes directly to, the investor returns. We're getting tax exemptions on our properties. We're getting our materials discounted or free. So the returns actually are what bring them to the table. Anywhere from, 8 to 12% cash on cash returns. With additional upside in the future, it looks like a regular, multifamily or commercial real estate deal. We just build in these incentives.
Yeah, very, very cool. So, Majesty, what's the exit plan for these kind of projects?
Well, okay. I'll tell you, there's two paths. One is a more aggressive path that I am on, which is to ultimately roll all of these properties up into a REIT. Yeah, it's in the future. So that's the more aggressive path for our fund. But also the other option is to sell them within a 7 to 10 year period, typically is what we're holding them for. And sell them to other organizations that are mission aligned.
Got it. Okay, very cool. So do you guys self-manage these properties or do you outsource the management? How does that side of things work?
We tried self-managing initially. As everyone knows, that can be a headache if you don't have the economies of scale in the background. At the moment, we're outsourcing to third-party management that specializes in affordable housing. And we're focused more on acquisitions and rehab and scaling it.
What you're good at.
Exactly.
Okay. Very cool. Well, it sounds like really, almost idyllic. It's like a win-win-win-win-win kind of situation, right? So your tenants are winning because they're now in a nice home that's been recently refurbished and it's affordable for them and it's, central location. It's a win for the neighborhood because you're raising up the whole neighborhood with these, turning these disaster zones into good housing opportunities and attract them that way. It's good for your investors. It's good for the city, the community. What's the downside, or what's the difficult part of this business?
The difficult part is the deal structure, the capital stack. That's the difficult part. One of our biggest partners, as I mentioned, is the government. And I'm sure, coming off this shutdown, everybody can understand how challenging they can be to work with sometimes.
Yeah.
And so that is honestly the most challenging part, is pulling together all of the resources, meeting all of the needs of those different resources, because they have different goals, and then also operating on their timelines as well. So most of our deals move slower in terms of the acquisition process. And I would say sometimes the construction process, because you have to go through these HUD processes and XYZ it's a lot of compliance. So that's the downside, I would say.
Red tape coming out your ears.
Yeah,
wow. You gotta have a special kind of patience and a personality to be able to deal with that.
Yes.
Okay, so right now, that's a beautiful project. Thanks for sharing that with us. At the time we're recording this, we're at the end of the year. We're going into 2026. What do you got on the horizon for the new year, Majesty?
Well, I have a 60-unit deal right now that we're closing on, and it's would qualify more as workforce housing. There are no, voucher residents there. They're just typical blue collar, workers. So we're closing on that.
So that's an existing property that you're going to
existing property. Yes, sir. Existing.
Is it vacant as well, or are you going to have to?
That was completely stabilized already. It's a Freddie Mac assumption, so it's an agency deal. And we have some more in the pipeline that are similar to where we're doing more acquisition of existing properties. In the current market, there's a lot of owners that are having challenges and are looking to, get out of their properties or just exit the entire market. And we're taking advantage of that opportunity and, buying at a discount, and then repositioning these properties as such.
So what are you going to be doing to kind of add value to these properties? Like I get it with the one you talked about. It was a disaster. Now it's pretty. It's empty. Now it's full. I get it. What about these ones? What's the value add for you and your investors there?
Typically, the properties have issues with operations or management, so we'll come in and boost that. They have ownership that is not local, so we'll be local one. We are injecting CapEx into the property to beautify it and modernize it, and then wraparound services and that we bring to the table. We have partnerships with Better Business Bureau, JP Morgan, Truist. They offer financial literacy classes. Better Business Bureau offers business building classes, things like that. So we bring in those types of benefits to all of our properties as well. So it's just, once again, just uplifting the community, which is not as difficult as it sounds because the current owners are absentee, and so we're just being more engaged with the property, if you will.
What's your favorite side of your favorite part of this whole business? Like what do you enjoy the most out of this, Majesty?
That's a great question. The part I enjoy the most is the deal making part. That's the part that I come from. I'm a serial entrepreneur. I love doing deals. I love creating those win-win situations. So I just love structuring deals. A lot of people see these projects and they see the challenges, and I see the opportunity and the value that can be created. And bringing that to life is very rewarding for me.
I would imagine. Yeah, like I say, you got to be a special breed to be willing to go through all that rigmarole. That's for sure.
Agreed. I agree.
So, Majesty, for folks that want to connect with you, find out more, poke around, find out a little bit about this kind of impact investing, where should they go? What's the best place for them to check that out?
Well, they can take a look at our website. The name of the fund is Global Vision Impact Fund. The website is gvimpactfund.com. I'm also very active on LinkedIn. So that's a great place to look me up. My name is Majesty Gayle. Just search my name. And I also have some YouTube videos that I do, working on being more consistent there, like yourself. But those are the places that I'm currently active.
Fantastic. Hey, Majesty, thanks so much for being on the show. This has been fun.
Thank you. I appreciate it.
All right, everybody. See you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.